Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This will get everything you need to know in 90 seconds at 9 o'clock. With news, inflation's bite is getting worse and the policy pushbacks are ramping up now. The stagflation risk is now very real. American producer prices are up 11.2% in March from the same month a year ago, the biggest increase since the data started being collected 12 years ago, and topping estimates. The increase from February was 1.4%, so recent rises are now running faster than the annual average. This will cement the Fed's inflation-fighting drive and probably lock in an outsized rate hike when they meet again in early May. And as expected, the Canadian Central Bank raised its policy rate overnight by 50 basis points, taking it to 1% and explicitly starting a monetary tightening phase. Canada's headline inflation rate is 5.7% and its economic expansion is now running at 3.3% real. And China's export growth slipped in March, although not by quite as much as expected, and it came in 15% higher than the year-ago level. But eye-catching in this data was the absolute decline in imports, down 0.1%, when an 8% rise was expected, itself a drop from a February rise of 16%. It is a massive negative turnaround, indicating very weak local demand. It is even more stark when you notice that the energy imports were up 39% by value in March. The sharp divergence between exports and imports juiced their trade surplus up to $47 billion in the month, with the US surplus touching nearly $60 billion. But none of these March results are records, far from it. China has also signalled that a reserve ratio cut is in the works to help keep their economy from slipping back amid heavy domestic economic headwinds. They also have their banks raising vast amounts of new bond funding. And with all this liquidity being readied, you do have to wonder what the quality of the projects that are going to be funded will be. In Australia, the respected Westpac Melbourne Institute Consumer Confidence Survey posted a modest fall in April from March, but it now sits at its lowest level since September 2020, when pandemic fears were dominating. Now they're worried about geopolitics, floods, inflation and interest rates. The US Treasury 10-year yield has slipped today, down 3 basis points to 2.69%, and the price of gold starts today at $1,979 an ounce, and that's up another $8 from this time yesterday. And oil prices are up $3.50 today at just over $103.50 a barrel in the US, while the international Brent price is now at $108 a barrel. But the Kiwi dollar will open today almost 1 cent weaker at 67.9 US cents. Against the Australian dollar, we're 3/4 cent softer at 91.2 Australian cents. Against the euro, we've sunk a full 1 cent to 62.4 euro cents. That means our trade-weighted index starts today at just on 73.7 and its lowest in a month. We welcome your feedback. Leave a comment below or on our website. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.